Good evening, everybody, and thank you for making it on the conference call today. Really excited about the information we're going to be sharing. Before we get started, I definitely have to say thank you to our president of GaREIA, Mike Jacobson, and also to Karen Yap, our executive director, for putting together these types of trainings. To the listening audience, I know you're excited about this weekend, Super Saturday, and my name is Wendy Lovejoy. I'm the marketing director for GaREIA and very excited about the information we're going to share tonight. So I know a lot of people got the emails and you got the text, you got the 7-day newsletter, so you definitely have an idea about the exciting gentleman we have on the call tonight. So I'm not even going to steal the thunder. I'm so excited about having him on the call. I'm going to let him introduce himself and share with you just a little bit about what you're going to get out of this weekend's training. So, John, are you on the call?
I am. Thank you, Wendy.
The call is yours. Please introduce yourself to the audience and just share a little bit about yourself.
Thanks, Wendy. This is John Mangham. I'm a longtime real estate investor, participant in GaREIA trainings and activities over a couple of decades. I happen to be a CPA, but not a full-time practicing CPA. Happen to be a real estate broker, but I don't typically sell houses for people other than some of the work that we do. But I'm a very active investor, syndicator, developer, renovator, buyer and holder, and I've got a lot of gray hair. For those of you that will join us at the Super Saturday intensive coaching session this weekend, we'll have time to talk further. But Wendy and Karen and the group at GaREIA asked me to talk a little bit about what we're going to be covering this weekend. And we're taking a little different twist on a lot of training programs that GaREIA has done in the past. This one is 110% content. It is 110% based on experience, and it is 110% based on what you need to make your deals work. So we've called it an intensive coaching session, but we're going to structure it following the life cycle of a real estate investor. How do you get in a game? How much money does it take? You need some cash. What are these no money down deals? What represents a good deal? You know, if you're in the buy and hold business and you've got a property with $100 a month positive cash flow, is that enough? If so, why? And if not, why not? So what if you don't want to be a buy and hold investor? What if you want to be a fix and flip investor? What if you want to get into multifamily? You have to know your parameters going in. A couple of weeks ago at the GaREIA meeting, we talked about what is your real estate mission? And that was my way of asking the group, what are you up to? What are you doing? Can you articulate, can you spell out to me why you're here, what you're investing in, what your objective is, and what you think your results are going to be? And if you can't articulate those things, if you're just in it because it seems cool and you're going to make, quote, some money, well, that's all well and good. But why not sharpen the focus and understand how to differentiate a good deal from an ordinary deal? Understand the difference between doing a paint and carpet renovation versus pushing out the back of the house or blowing up the roof and adding a lot more square footage and taking on a true construction project. So it's a little bit of risk and reward analysis. It's a little bit of practical advice. And it's a lot of intensive, how can I help you get down the road where you want to be? I've been doing programs for GaREIA, and I've been teaching in the real estate, the realtor community. I've taught for CPAs, I've taught for lawyers, and I've taught for bankers. Over the last 5 years, my partners and I have raised in excess of $20 million in private equity and debt. We bought in excess of 250 properties. So we've had a pretty good run during the downturn. And as I talk to groups and I describe some of my experiences, which don't cover everything, but they cover a lot of things because I'm getting old, everybody says, well, what about this entity? And I said, which entity? Well, I'm going to do a corporation. What for? Have you bought a house yet? Well, no, but I need to do a corporation in the land trust. And so what I hear is there's a lot of razzle-dazzle. There's a lot of things going on. The use of entities. What entity is right for you? What should you be using in your real estate investing? What should you be using in your real estate operation? And these questions come in not in a logical flow. They come in because that's what somebody heard on an audio tape or on a program one night. Well, when do I have to register with the Secretary of State? What about the Securities and Exchange Commission? What about my tax return? And it's a jumble. So what I like to do is approach this entire process with a chronological framework and say your investing career is going to begin by raising some money, a little bit. You're going to get into a deal. You're going to get in the game, and you're going to get your feet wet. And then you're going to start looking at the use of entities and which ones and why. And then you're going to look at adding professional resources, the attorney you use more regularly than not, the CPA that you use. How do you build your real estate team from the practical point of view? So we've got a lot of ground that we're going to cover on Saturday, and Wendy asked me to try to hit some of the high spots. For example, a buy and hold investor. How much cash flow, how much positive cash flow should you have on a buy and hold investment? And the back of the napkin answer is you should have at least $200 a month positive cash flow penciled into your analysis before you buy the deal. Well, what if it's $68 and there are some other factors? What if there's a bonus, like it sits on a double lot? What if there's a bonus, like it's got a detached garage that might have an apartment that you could build out one day? These are all factors that you think about. So our coaching session is going to take an example like the one I've just created, except I'll hear from some of you who will be attending, and we're going to expand those examples. And I'll take less cash flow if I have a bonus that comes with the property, like that extra space that I can build out and rent for more money one day. So my approach is a practical one. My approach is based on real world, real numbers, real deals in and around Atlanta in literally the last 5 years. Granted, I've been investing since the 1970s. I just came across the checks that I used to make a down payment to buy my very first property. And that was almost 40 years ago. So when we hit the right year, I'll talk about 4 decades of experience. Boy, it's crazy. So, Wendy, we've got a lot of ground we're going to cover Saturday, and I don't know how to do it justice on a call like tonight, except just to throw out a few of the nuggets, like the rule of thumb, just the pure rough-cut rule of thumb, buy and hold, $200 a month cash flow, fix and flip. Don't go into a fix and flip deal unless you can see approximately $20,000 of profit. Because as soon as you make a mistake and there's an air conditioner needed, or it turns out there are 2 roofs and it's got to be replaced, and you burn through another $5,000, $7,000, or $11,000, and then it takes longer to sell it, and then you've got carrying costs. If you've got an approximate $20,000 profit going in on your fix and flip analysis, and you make a bunch of mistakes, you'll probably still make $1,000. How bad would that be? But if you tell me you're going to do a fix and flip for a $7,000 profit, and you don't have a lot of experience, you're treading on thin ice, and more often than not, you fall through. So using practical examples, using real-world examples, and tried and true investor rules of thumb is what I'm going to be about this coming Saturday. So, Wendy, what else can I tell you tonight?
Well, I just want to say, John, I am so impressed with just being on this call with you because you give so much content, and we know you're in a lot of demand right now. You've been traveling, so I really appreciate that you've fit GaREIA into your schedule because I know that our community is going to be very, very pleased. When you did the general meeting, everybody I spoke to said, oh, my God, he gave so much content, and he gave us step-by-step. Are we going to get the same kinds of trainings as you did on Monday at the general meeting?
You know, Wendy, at the general meeting on Monday night, we went for 90 minutes. I thought we were going to go for about 80 to 85 and take a few questions, and we wrapped up in about 91 minutes, which is basically okay. But we're going to take that 91 minutes and blow it out into 6 solid hours, plus there will be time for questions. Of course, there'll be lunch break, and I'll hang around after the program's over and answer questions. But one of the areas that it's hard to do justice, but it's a fascinating area for newbies as well as medium bees. Maybe not old bees, maybe not the guys who've been around the game for 10 or more years. But one of the areas that I want to delve into is the use of entities. You know, creating the entity, getting the tax ID number, getting it set up with the Secretary of State, what the reporting requirements are, what the tax issues are. And one of my guests scheduled to join us is a real estate attorney, and I use him for some of my entity formation. And so we're gonna crack that one open. We're going to get into the nuts and bolts. I don't know whether we'll have a chance to go online and actually form an entity. That I've been sort of saving that. You don't want to form one. It's like birthing a child. Okay, we formed an entity. Now we're going to leave it on the side of the road. Well, who's the forming agent? Who is the registered agent? Who is responsible for annual registrations and tax returns? Somebody, like a parent, has to shepherd that entity. And so we may not form one live, but we're going to walk through the steps. And I don't think we covered that in much detail at the Georgia REIA meeting, but when people get to the stage of, I need to use an LLC or I want a corporation, it's one of those areas that I think has too much mystery around it. There are lots of rules associated. You've got state rules because you're forming an entity at the state. You've got federal tax rules. You've got state tax rules. And you've got ongoing administration issues. And so that's one of the areas we're going to concentrate in. One of the attorneys I've worked with quite a bit will join us. Wendy, another area we're going to concentrate on, and it comes from one of our business associates, is using an IRA. There are do's and don'ts and pros and cons, and many of our members have heard from Dykes-Boddiford. We don't need to go over all the ground again, but I believe there's a time that you start to bring your IRA into play. There's a time to fold your IRA into your business, and there's a progression. You don't do it on your very first house because you don't know what you're doing. You don't do it on your second, third, or fourth because you still got your training wheels on. But when you start to bring in your IRA, you do it smoothly and with confidence. Training wheels are off. You've ridden around the block. You've ridden to the next neighborhood. You can ride for hours. And when your IRA comes into the deal and you start using the resources that brings, boom, you're multiplying your capabilities. So we're going to spend some time in those two areas, and we're going to use the legal resources of a real estate attorney. We're going to talk with Monty Smith, who is one of our business associates over at Advanta. I have an IRA, and I've got a couple of different entities that my IRA invests in. We've had some real good success. So those are things that are also content-driven that aren't specifically categories that we discussed at the general meeting this week, or 2 weeks ago.
So this being this Saturday, can you share after the day training and everything, should a person that is new, what about the person who's been at Georgia REIA but a little paralyzed to go ahead and get their first deal done? Would there be anything covered to kind of address them?
Wendy, Saturday's training, it's intensive coaching, and people who have done 2, 3, 5 to 10 deals might say, oh, yeah, I know that rule of thumb, John. Oh, I've done that. But as soon as we get going, this is going to be fast-paced. This is going to be wide-open questions. We're going to open up the board. We're going to answer the questions. We're going to use examples. And as an older, longer-term investor, I know that I don't always get something if I attend the class, but I'm only in it for 1 or maybe 2 nuggets. So maybe the old pros who have been in the game for 25 or 30 years may not get anything. But people who have only done a few deals, people who have done 5 to 10 deals, are sure to get some new twists, new techniques. I talked to a client today about a 1031 exchange, a world that I've worked in for over 20 years. And I said, here's a twist. When you're selling a property and there's not any money and you're taking back the note, here's how you still handle the 1031 exchange issues. And he said, I hadn't thought about it like that. So having that perspective, having the older generation, the longer term participants involved, they'll throw the harder questions out. And it's going to be my job to link the hard questions to the base material and say, this is where you get to after you've come up several steps or several rungs on the ladder. And that's part of what I'm going to try to do. So if we've got some old-timers or long-timers, or if we've got some people who kind of got beat up in the market over the last 4 or 5 years, got caught holding the wrong mix of properties, come on. Let's talk about re-energizing your business and your portfolio. Let's talk about what lenders are doing today on operating portfolios of existing rental houses. You'd be amazed what lenders are willing to do these days.
And you hit the nail right on the head because myself, I was sitting with a few people who did very well in the market and then, as you said, got beat up about 4 or 5 years and are coming back into the industry. So refreshing and just hearing how the industry is operating now, what the banks are doing, what's the best way to invest. You really covered so much, and I left the general meeting very energized, looking forward to Saturday. And I would love to do exactly as you said. If we can now just open up for a couple of questions, John, would that be okay?
Absolutely. Be glad to take some.
Awesome. Karen, if you can unmute us, please. And guys, please remember that if you're in a noisy area, you definitely want to mute yourself out because it is a disservice to not only our speaker, but to the person asking the question and the listening audience if they cannot hear the answer. So please mute yourself out, and then you can still hear what is being said. And when you ask your question, you can just unmute yourself and then remute yourself when you finish. Thank you. Okay, we are officially unmuted. Does anybody have a question for our presenter tonight?
Hi, what was the cost for Saturday's program?
Karen, can you address that, please?
I am not looking at my computer right this second. If you go to GaREIA.org, GaREIA.org, you'll see John's handsome face right there on the home page, and you click there. It's approximately $99. If you pre-register, it is going to be cheaper than at the door. So if you would, please visit the GaREIA website and click through, and it'll give you all the information about the event.
Okay, thank you.
I have a question.
Yes. Before we go on with the next question, I just have to say that one of the things to recognize is that the money that you're investing this Saturday, you're going to get back 100-fold because the information is just uncomparable. And we've heard a lot of speakers, but John breaks it down like nobody else I've heard, and I'm not just saying that because he's on the call. So next question, please.
Yes, I've been looking for deals. I try and keep it to around where I live, but at the moment it seems like I'm being priced out of the market. Do you have any suggestions as far as looking for deals in the nicer areas, or is your experience more in the lower income areas?
That's a good question. What represents a good deal? Where do you find it? How far should you go from where you live, et cetera? I have worked a spectrum of deals, everything from buying houses for $6,000 and getting them fixed up and put in the Section 8 program to buying resort real estate that's priced at literally $1 million and doing the vacation rental program, where people pay almost $3,000 for a week to come to the beach. So, there's a whole spectrum, and there's money to be made at all levels. When we talk about finding deals around where you are, and I don't know where you live, but I want to talk in a little more general term, My general rule of thumb is you want to be within about 10 miles of where you live, especially if you're getting started. Now, if you live in, Country Club of the South and you only want to drive a mile, then all your deals are going to be $750,000 and up. And you won't find many, but if you find the killer deal, you'll make several $100,000 on it in one fell swoop. The problem is expensive deals take a lot of capital. And so when we talk about nicer communities, better deals, more expensive properties, I find that most investors don't come to the game with lots of capital. They've got $1,000, $5,000, $10,000, $20,000. They don't come into the game with $100,000, $200,000, $500,000. And so we wind up talking about product that you can buy and get it fixed for something in a $50,000, $60,000, $75,000 to $100,000 range, up to about a $150,000 range. Now, there are plenty of neighborhoods where you can buy cheap product, but it's going to get destroyed because the neighborhoods are troublesome. They haven't turned yet. The neighborhoods where you're getting priced out, where you used to be able to buy a good fixer-upper for $99, $109, $119, and now they're being priced at $179, $189, the market's running. I will tell you all, the market has been running like crazy for the last 6 months. I've got deal after deal after deal coming to the market priced at 10 to 15% higher than our projection when we bought it 4 to 6 months ago. And that's great for a seller today, but it's tough for a buyer. So the question was, how do I find a deal when I'm being priced out? And I find that you've got to put your ear to the ground. You've got to get a sense, you've got to look at trend lines. You've got to look at more data and more statistics. And you may have to pay more for your deal, but one of the best ways to find out what the market's doing is to go inside the properties that are selling, go inside the properties that are already under contract, and watch the statistics so that when they close, and they close at fairly close to asking prices, especially if they've been fixed up, now you're seeing that things today that are selling for $159, $169, $189, that last year at this time, nobody would have dreamed that they would have sold for over $139. So what it means is you've got to pay more for your price of admission. The entry level is going up. And if you can't support the entry level, if you can't see the right profit, then you've got to shift your thinking and go into a community where your price gets reset. You buy less square footage, you buy less renovation work, you buy a slightly different type of deal. And from year to year, the good deals, the market changes. Anywhere that there's a lot of competition, folks, one of the hottest markets going is Old Fourth Ward, where Ponce City Market is coming in and the Beltline is coming in. And there was a time when people would have called that a war zone, and you could have had all the houses you wanted for $50,000 apiece. Today, you're going to buy a property over there for $200,000 to $250,000 that you're going to put $100,000 in, but it's going to sell for $475,000 to $700,000. And it's because of the transformation that's taken place in that area. And so at the end of the day, there's no substitute for market data. And so you can check Zillow, which we all roll our eyes about because we don't think their values are solid, but it's a baseline. You can check Trulia, but you've got to drive the houses. You've got to drive what's on the street. And so that's a long way of saying you may be being priced out because you've set an acquisition target from sometime maybe in the past 6 months, but the market has moved. The market has moved dramatically. And I predict, folks, that the journalists, when we get to probably August or September, when the second quarter statistics are in and people start correlating the data, and the journalists are going to tell you that the spring of 2014, the market experienced a significant spike, a pop. So doesn't mean go start paying too much to buy houses, but it means go check the most current sales. Talk to a few real estate agents. Get a buzz of what's going on in the market. There's no substitute for feet on the street.
Anybody else with a question?
Yes, I have a question. Can you hear me?
Yes,
and guys, please feel free to say your first name and where you're calling from.
Okay, this is Holly, and I'm wondering if you're going to cover the topic of property management this weekend, specifically managing your property manager.
Holly, we've got room for a lot of questions this weekend, and I will probably be able to spend some amount of time on the concept of managing your property manager. I have both been a third-party property manager for other people. I've managed my own property, which, with a real estate license and the escrow laws, trust account reporting, all of that can do. And today I use a third-party manager. And I've got some specific thoughts about when you hire a property manager and how you set expectations. Most investors will tell you that a property manager will never do it as well as they can do it themselves. And I believe that's true because property managers won't answer the calls at 7, 8, 9, and 10 o'clock at night, and they won't spend all day Saturday taking the calls. But the day comes when you've got to accept some level of inefficiency because you're making more money doing your deals than you are managing your tenants. And part of it is getting the rapport and the conversation and the expectation level with your property manager. And I use a mix. There are two different property managers I work with. There are some properties I manage myself. I use a hybrid solution. So we can spend some more time on that, and we'll try to fold it into the parameters of what reasonable cash flow returns look like on different levels of houses.
Okay,
so
thank
Holly,
you, John.
if you can make it, we'd love to dig a little deeper into that.
Thank you.
Wendy, I think we're pushing our 30-minute window.
Yes, sir. So this will be the last question, and then we'll have John close us out. So the person that just spoke, feel free to say your name, where you're calling from, and you're our last question.
Okay, thank you. Hi, I'm Curtis. I'm calling from Washington, D.C., but I'm a college student at Morehouse College in Atlanta, Georgia. I'm a young investor, a potential investor, and it's kind of difficult as a college student to, try to pay tuition, but at the same time try to invest in real estate. So I'm quite familiar with the politics and economics of Atlanta. I've been following numerous articles and numerous newspapers, and I'm looking at Vine City as a potential investing spot. I know the city is developing a new Georgia Dome. I know the city just bought Morris Brown, so I know that area is going to grow. It has potential. So my question for you, John, is do you have any advice for an investor who is a college student, and also do you have advice on how to attract investors to invest in my real estate?
Curtis, a couple of thoughts. As a college student, you're young, you've got energy, you've got enthusiasm, and I wouldn't say flat out, don't invest in Vine City, but I believe Vine City is going to be a longer development run. The mayor and a lot of important people in the city, publicly and behind the scenes, have made statements about the capital that's going to be invested in revitalizing Vine City. Progress is coming, but for a younger investor to go invest in Vine City, and you're going to buy something today, and if it's improved and it's rented, and one day it gets damaged, and you're in class or you're on spring break and you've got to deal with it, it's going to be frustrating. My personal feeling is that Vine City is an investment for a longer haul. The prices are still depressed, even though people say good things are coming. My feeling is I want to see the city or the government put money in there first. There are some investors, there's some long-term investors who have bought up a lot of land over there. I believe they'll be able to sell their land to big retail developments or to some of this redevelopment process. But without a lot of capital, you're going to be limited to a house here and a house there. And one of the things that I believe about investing is you need to get to know the community you're investing in, whether you get to know the neighbors or the politics. You know some of it, but you're going to have to spend some time on the streets in Vine City. There's some good people there. And, then there's some tough stuff going on over there also. So I believe people will make good money there. The question is how long, and, what if it takes 12 years and you're really thinking you'd like to make good money before you get out of college? You're going to have capital tied up, and it's a quirky kind of market. So I would say do some more homework before you pull the trigger on buying something in Vine City. The other question, and I just want to touch on it, how do you raise capital? And you're in a very tough position because when you go talk to people with money, invariably the people with money are happy to work with the people who have energy and have good ideas and have good deals. But if you bring me a good deal in Vine City and I go look at it, I'm going to say, yeah, no, I don't think so. I don't need to take that kind of risk. You want a slightly more homogeneous product if you're going to try to raise money from people who are a little bit older, who have the money, and you're going to have to find a way to pair up with them. Curtis, one of the things we're going to expand on Saturday is partnering in deals. What's a fair partnership? What's a good rate of return? You know, what kind of ways can you offer something to people with money? That one of the adages that we've heard for years, and I believe it 100%, if you have a really good deal, you'll be able to find the money. I recently had a conversation with a banker, and I said, here's the house. I told him all the terms of the deal. And he said, oh, I've already got all that worked out. You just tell me when you want to close. And I thought, he's already done all the underwriting? And I realized it was a loan-to-value of less than 50%. I had equity in the deal. I had a lot of parameters that gave him so much safety. If he lost the house, or rather if I lost the house and he took it back, he's going to make more money than he would on the loan. And so the way you get started is to do slightly disproportionate deals. You give away a little more profit than you'd like to, but you make it attractive for the money to come with you. And then after you start to perform, you say, okay, I've proven myself. Now I want a different shake on the next one. And you can do that. We'll talk about that on Saturday.
Okay, thank you.
Wendy, I know we're at 30 minutes. I just want to issue the invitation one more time for people to go to the Georgia REIA website and register for the program on Saturday. I think it's $99. It might be $89 if you register early. I don't keep up with that. But please take a look at the material online. Saturday we're going to have a morning session, the afternoon session. We're going to have several guest speakers speaking in their area of expertise. And I'm going to challenge them from the real-world perspective, hard money lender, an attorney, an IRA investor. You know, I'm from my perspective. So there's going to be some back and forth, and then the people in the classroom are going to be able to ask questions. Then when we get done, you know, if we still haven't answered questions, I've committed to Karen and to Mike and to Wendy that I'm going to hang around for a little while afterwards, so we can try to hit the things that somehow we didn't manage to cover in an intensive day of coaching. So I want to thank you all for joining the call tonight, and I look forward to seeing as many of you on Saturday as can be there. Karen, I hope your registration basket overflows tonight. Mm-hmm. Wendy, thank you for having me, and I hope everybody has a good evening. What else can I do for y'all?
You've been gracious. Thank you so much, John. We'll see everybody on Saturday. Have a good evening, everybody. Get to the website.